Good morning, everyone. And first of all, thank you so much for taking the time to be a part of this, to be a part of the audience for this panel. I'm truly excited to host this panel, but I don't think my role is so much of a moderator because we all are so passionate about this topic that we're going to ask questions of each other, and so that at the end of the day, at the end of the session, we hope that you would walk away with something new and learn something new, which is the whole point of this conversation. So with introductions, my name is Sandeep Haridas, and I'm the Executive Vice President and Head of Insurance Business for IntellectAI. I've been in this industry, in the insurance industry, for over 22 years, 19 of which was spent with a Tier 1 carrier, and 3 years that I've spent with Intellect. We are distributors. We build underwriting and distribution ecosystems, and we are a proud supplier to Simply Business to Han. Han, you want to introduce yourself?
Good morning. It's heartwarming to see a room full of eager and exciting faces. It's the last day, or almost the last day here, and thank you for being here with us. My name is Han Lam. I head up the US MGA program here at Simply Business. For those of you who haven't heard our names, Simply Business is a digital marketplace serving small business owners for their insurance needs.
Hi, folks. I'm Clive Thompson. I'm a reinsurance broker at Guy Carpenter in our InsurTech Center of Excellence. Our InsurTech Center of Excellence is an individual practice that's devoted to servicing digitally native companies, ranging from sizes of those who are startups all the way through mature public entities. For those of you not familiar with Guy Carpenter, we're a Marsh McLellan company. We are a reinsurance broker and capital solutions provider.
Good morning, everyone. My name is Jascha Prosiger, part of MunichRe, and my team is responsible for InsurTech programs, so meaning we work with companies like Simply Business to provide capacity and paper behind those exciting MGAs in the InsurTech space.
All right, awesome. Thank you so much. So let's get started. Let's talk about the business first, the small commercial business. It's known, but it's exciting. It keeps evolving. There's something new that is coming out every day. So let's ground ourselves in defining that small commercial area and what specifically your organizations do or bring to the table as to meet the needs of these small commercial players. Han, you want to start?
Thank you. So Simply Business has been around for 20 years here. We were born out of the UK marketplace, and we brought this operating model here to the US about 7-8 years ago now. And after insuring about 1 million customers, this thing continued to ring true, is that insurance is a simple yet complex subject here. And for us, the recurring needs or the continuous urgency needs here is finding a way to help our customers, our small business owners that have 0 to 1 to 5 employees, finding the right coverage for their needs here. Did you know that every month there are about 400 new applications for starting out new ventures in the US here? And this team has been consistently true for the last number of years here. So if you think about it, 5 million ventures are being born out every year, and they're different in needs and nature here. And so Simply Business as a whole, we continue to study these needs trade by trade to make sure that we deliver the right coverage to the right customers here. So that to me is the consistent need that we as a company bring to the marketplace today.
400,000 is a big number. Clive, what about you?
Yeah, I think we didn't plan this when we were thinking about how we would sit, but it's quite fitting as a broker that I'm sitting between a reinsurer and the MGA. But more specifically, what we do is at a practice is we would work with an MGA or a carrier that's servicing the small commercial space. And then we were going to be providing risk capital solutions or sourcing those solutions with reinsurers like MunichRe and Yasha's team. I think what's really exciting about the space that everyone will be wondering is that these small commercial players are increasingly being served through a digital experience. So originally, if we roll back the clock 10 years, most folks would have to go to an agent and they would procure their insurance through a traditional format. And like all things insurance, people want choice and ability about how they engage and gain their coverage. And there are certainly many, many folks who maybe prefer for personal lines to go through a digital experience. And what's really exciting in this space is that digital experience is now being translated to commercial coverages. What's maybe most relevant, though, and really interesting is that this space is a very profitable area for the insurance industry. And as a result, reinsurers have generally not necessarily had access to this business. This business was generally kept net on primary company balance sheets. And by that, it's because it's a lower volatility space and reinsurance wasn't always necessarily needed or be packaged up with a number of other lines of business. So it's really exciting, I think, from a risk capital perspective, and maybe from Yash's seat, is that when you have unique businesses or unique business models providing these digital experiences, it gives access to new and different types of risk capital and also venture capital that wasn't maybe previously available 10 or 15 years ago.
Well, it's a good sales pitch by the broker of that business. No, I totally agree. And I mean, why is this space exciting for us? I mean, as an actuary, when I look at it, what are we seeing? We see independent risks spread out across the whole country with small limits. I mean, that brings diversification. It brings huge portfolios with no real accumulation in those portfolios. So for reinsurers, super exciting. Could we serve this market directly by underwriting deals? No, right? We're obviously not set up for that, and we don't want to be set up for that. And that's where the insurtech space and companies like Simply Business are coming basically in to solve that problem for us, to say, we want to deploy risk capital in that area. How can we do that? And I think this is the best way to do it for us.
The seating chart was intentional. So just saying, it wasn't accidental.
So Han, we just heard from Sandeep that he's a tech provider for you. Out of all the opportunities you utilize automation and AI, what did you focus on with Sandeep, and what ideas are you evaluating in the future?
Thank you for the questions. So the US MGA celebrated our 5th year birthday in the US about 5 years ago, last year here. And we were very scrappy from the beginning. Like many of you who set up MGA before, we use what we have. We scale the book from 0 to 40 million with what we have currently in the system. And so we stopped being scrappy when we called Sandeep. We said, Sandeep, we are a specialized underwriting unit. We have delegated authority. We borrow money from capacity providers. We take the risk with the fronting carriers here. And we need your help to create a one-stop shop for our underwriters. Underwriting are the fundamentals of the business here today. And Sandeep and his team create an awesome system for us where it takes all the initial data intake, combine it together. It takes years of underwriting expertise, translate that into business rules, and pair up with third-party data. I see many of the vendors in the room today that we had talked to and partnering with. We take all of that intelligence and we give back time to our underwriters to focus on more complex problems. Let me give you a simple example on how this come to life for me. Most of us have a landscaper, and some of them are trimming trees for us. As you know, as those of you who are in the risk management business, it's a different exposure when you start trimming trees. It's a different type of risk. And so how do I differentiate the risk from just a normal landscaper to the one that are involving in a more hazardous operations? It's a different price point. It's a different underwriting criteria here. And what the machine does for us is it takes all of that human intelligence, pair up with the data that we have externally about the customers, and help us segment the risk here. When to say yes, when to say no, when do we ask clarifying questions after the purchase here. And it does that for us to give back the time where we need to focus on more complex risks here. And that's how the magic happens behind the scene. What we're working on right now is adding the intelligence to it. There are market opportunities data available. There are industry loss results, benchmarks available. And what I like to do is, with my small team, I find a better way to do business where I want to take all of that intelligence between market opportunities, performance, and pair it together so that we can focus more on assessing the product and coverage need for the customers. But the machine can tell us where to focus the energy here. Where do we find the niche market where it's profitable to continue to scale? And where do we need to evaluate our pricing, our coverages, so that we can do a better job at serving the customers at the end of the day?
That's a really good description of what we built for you. But let's be honest, we wouldn't have been able to build this without your vision. This was the first portfolio underwriting system that we were building. We configured underwriting systems for a lot of carriers and MGAs, and yours was a very unique implementation, and all started with the vision that Simply Business had. for a portfolio underwriting system rather than a transactional underwriting system where we're looking at accounts. I come from a middle market background, so portfolios were managed very differently in my world, but the small commercial world is so awesome. And Yasha, this is where I want to go next. Thanks, Han, for that. In your job, you talk to a lot of MGAs. I guess at some point more than you would care for. So what technology and now AI somehow is a synonym for technology. So why don't you combine that and tell us what technology or AI do you see deployed in the market, and what part of that overall insurance value chain do you see the tech rollouts being focused on? And I'll ask the second part of the question later. Why don't you start with the first part?
Thank you. So I don't have to remember all of that.
Yeah, you don't have to remember that.
I mean, yeah, you're right. We see a lot of MGAs, and we talk to a lot to filter down, of course, to the ones where we say these are the ones where we should really engage and create a partnership. We're not looking for a 12-month deal. We're looking for a long-term partnership to grow together and put a lot of money also behind that business model. So we should talk to a lot to find the ones that we really like. What are we seeing? I would say there's kind of two areas. There's the ones maybe more like Simply Business, and with your help, where we see, okay, there is great automation, there's great digitalization, there's great customer journeys, and that's what the technology focuses on. So really serving the customers on the front end in the right way, but then also from an underwriting perspective, exactly the example that Han gave is to say, okay, how can we be accurate in pricing and identifying the good risks here? We see that a lot, and then there's a second part of MGAs, which is also quite exciting, but they're often in an earlier stage or more specialized, which is companies that maybe started in the area of risk identification, risk prevention, and using technology for that. So companies using computer vision to identify certain risks of like how people move around, things like that, or from a property perspective, automatically analyzing videos, all of that, and then wondering, how can I monetize that? And then they turn into MGAs. For us, both is interesting. Of course, there's different trajectories for these companies in terms of how to scale and how fast will the adoption of this work. I would say there's still a lot of success in the space of standard policies and just doing that in a kind of down-to-earth way of using technology and not throwing large language models at every problem there is.
So rather than, that was a great insight. So rather than asking you the second part of the question, I want to turn to Clive and ask the same question around, because you speak to as many capacity providers as you speak to MGAs, because you are quite literally sitting between them. What are you seeing as technology implementations?
Yeah, I think just speaking from the MGA or the carrier side, I think what's really interesting with this new era of what I would say personally is like we're replatforming. We had the first phase of the InsurTech cycle of really replatforming almost the customer journey and experience in many different ways, and now AI is accelerating and using all of that basis to, at this stage, the earliest phases, I think everyone's looking to solve a lot of operational problems. I think that's the low-hanging fruit. There's a lot of questions about how do I ingest data? How do I interact with my customers more smoothly, more efficiently? How do I take F&OL for a claim? Or how do I triage, a number of submissions? Or how do I get the best packaging or repackaging of underwriting information into an underwriter's hands or a system's hands? I think that short term is really exciting. It's incredibly going to change the expense ratio structuring. I think it's going to take a little bit more time to see it in the loss ratio results. And then over the long run, I think we will see really interesting applications truly in claims and underwriting decision making. But I think that's going to take a long time for the industry to adjust to. And a big part of that is the regulatory environment as well. I think regulators are going to have a lot of questions over different lines of business and applications of AI, and to what degree is a human or a machine making the decision. And I think that's what makes it incredibly exciting is after we get through maybe the operational problems, then we're going to get really to the next layer problems, and that's going to be a long-term dialogue.
So really good points from my two partners here. So let me turn this around and then put our moderator on the spot a little bit. You talk us to many of the companies around here today and in previous year. As a tech solution provider, Sandeep, how do you see the future bringing here for us?
I did have the privilege of speaking to almost 60 different partners and prospects and customers yesterday. It was a grueling day. But it only reinforced or really ensured that the way we are thinking about technology is the right way of thinking about technology. And there are two buckets or two baskets, right? And it spans the entire gamut of sophistication between small commercial all the way up to the very, very large major account deals that you would get into. And I'm speaking only from an underwriting perspective, but it kind of extends into the claims world as well, and all other operations. But there's AI in the loop and there's human in the loop. Those are the only two patterns that would be relevant or prevalent in the future. The small commercial space is going to be sort of a human in the loop, where AI is going to do a bulk of the work, and humans would always make decisions. And that is something that we are very adamant about, and we are very clear. And if we have prospects or customers who walk away saying, no, I wanted the AI to make decisions, someday we might get there. Sam Altman and others, if you follow them, they've been talking about AGI or artificial general intelligence for quite a while. And we've been following that. We've been running our own experiments because we are an AI shop, and that's what we do. And we're looking at across the entire spectrum of technologies from Microsoft and all the other hyperscalers at Google, Gemini, and others, and have daily conversations with them. We are not there. We don't expect to get to that point where even if you had AGI in general purpose applications, you're not going to have AGI in capital decisions being made, at least for 5 to 7 years is our prediction, because the big angle there is still going to be regulatory and compliance. And regulatory bodies move slower than the business. We all know that. And maybe deservedly so, because they are the safety checks on what we do. So saying all that, AI and human in the loop is going to be the prevalent way of doing things for micro and small commercial business. The middle market and larger businesses, it will be AI in the loop, where AI is going to be doing more things around the bulky things of transforming data into one format to another, or making recommendations, applying underwriting guidelines, doing appetite checks, and issuing policies when a structure is given, generating proposals but not shipping them out again, because that's a decision that an underwriter needs to make. Or not making a payment decision or a reserving decision on the claims side, because that's a decision, again, that a human actually trained person or an adjuster needs to make. So AI in the loop and human in the loop are those two patterns that we see as technology in the future. And the whole concept of AI will run everything, AI will do everything is not something that at least our organization, and me speaking on behalf of my organization, which is a 32-year-old organization, we've been at it for a very long time. We don't believe that is a practical way of doing things. It might work in pockets, but generally speaking, it is going to be humans will always be in the loop for everything. That's what I'm thinking. So now, to repay you the favor, I'm going to turn this back on you. I'd ask you a very fun question, all three of you. I'll start with you, Han. What keeps you up at night because you now have an AI-powered portfolio underwriting system that is running a part of your shop. You're growing and all that, but at the end of the day, bringing it back to business and looking at the application of technology, what keeps you up at night?
So the machine is helping me on the underwriting side. The other side, and don't mind the companies that I'm surrounded with. There are two actuaries on stage here, but this is a nerdy answer, but it's rate adequacy is what keeps me up at night. The trends are continue evolving, and the loss costs are coming in. And as an MGA here, I need to keep the book healthy and profitable. That's what keeps me up at night.
Wonderful.
Yasha, you seem to be very happy. Why don't you answer the question next time? I'm going to turn to Clive after that. So what keeps you up at night, Yasha?
Well, I mean, the short answer is, does Han care about rate adequacy? But no, of course, very similar, right? Bottom line is what really matters for these programs that we run. What keeps me up at night, of course, when you think about automation and like being fast in the deals that an MGA does, like Simply Business, is of course like, what about misrepresentation? What about edge cases? Or all of these kind of the things that might be a bit tricky for a machine to handle, and wondering, have they all been considered? So the companies we work with, I would say, I don't worry, but I wonder, do they stay on top of all of these cases, or did they push out on a technology too fast and feel like, okay, let's see if it works. Let's see if it works is not really how we operate.
So I would echo rate adequacy, and I would say just coverage and service of the customer. I think we are in this small commercial space, really in a little bit of a Goldilocks scenario. I think customers are getting the coverages they need in an efficient way. They're having an excellent customer experience. They're certainly getting sufficient coverage too, just from a general limits perspective. And then I think on the other side, the providers of those coverages, the carriers, the MGAs, and then the reinsurers are all also in a very healthy way able to sustain their business. And I think that is a true win-win-win. And it's been present in the cycle for this space for multiple years, and really hoping that continues. It's an excellent, prosperous environment. I would echo Yasha's comment that I think as we're rolling out these new tools and we're moving very quickly and innovating, there is the question of we move a little bit too quick and then there's a deterioration at some point, somewhere in that value chain, somewhere in that Goldilocks scenario. I think it's one thing to change a customer onboarding experience. It's something quite different to have a claims experience be augmented or changed in a negative way. I think the good news is in the insurance industry by nature is cautious, and I think we're cautious in how we make these adjustments, maybe relative to other industries. But I certainly think during a time of transformation, we're in a really good phase of equilibrium, and hoping that equilibrium can continue and improve.
Fantastic. So let's take this home. I like to end all my panels with a question that helps the audience, and then we'll look to see if we can give at least 5 minutes for audience questions if there are any. But if there was one piece of advice, so let's turn those fears and nightmares into advice, right? So let's put a happy face on it. What advice would you give to MGAs that are looking to walk down a journey of technology, or one thing that you would want to tell them with your experiences? What is one piece of advice that they could take with them? Yeah, Yasha, you want to start?
Okay, sure. Well, I mean, in general, I would say you need to be humble in terms of understanding what are we good at, what are we not good at. I mean, the same applies to us, right? We're really good at a lot of things, we're also really bad at a lot of things as a 150-year-old reinsurer, of course, right? That comes with the strength that we have. And the same for an MGA. You really need to understand, okay, what do I focus on? What do I think, where are my strengths here? And where I don't have a strength, who am I going to pull in as the right partner? And that might be on technology, that might be on distribution, that might be on capacity or paper, but really deciding then, okay, who are the right partners for my weaknesses or my gaps that want to grow with me and kind of walk the talk.
Perfect. Clive?
I would say first, for an MGA, I think there's no substitute for having your trinity of core insurance expertise across underwriters, actuary, and claims. And maintaining those disciplines and human capital is incredibly important. But I think the advice is we all have to get comfortable being uncomfortable. We're going to have to use technology in a different way. We're going to have to get used to it, helping us make better decisions. And I think you have to maintain that curiosity, recognize that it is a period of transformation. And the way we operate, in the year 2025, if we were here 10 years ago at InsurTech Connect, we operated very differently as an industry. And I think we've gone through that cycle, and I think that's only going to continue to accelerate. And when we're back here, likely at the Mandalay Bay for ITC's 20th anniversary, I think we're going to be looking back at this era as another similar step change in how different companies are providing solutions to customers.
Really good points, right? Focus on your niche. As an MGA, as a solution provider, know what you're really good at and focus on your core strengths. And then find those partners in the audience in the hall today, the one that's going to answer your text at 11 o'clock at night, just to make sure that we wrap up the renewal well and done it well, and find those partners and build a sustainable competitive advantage with them. because there's no single company today that can do everything. And if you are trying, then you're gonna die trying to do everything in the chain here. And so as I share the stage with the partners that I consider truly a long-term partners, they're the one that's gonna answer my call and my text always. And they're gonna move things a little bit different than the one that are custom, that are just a off-the-shelf solution provider. And that's what my advice would be to all the ones that are starting out or just finding your way today, is build those relationships. Technology will advance faster than we think and better than what we imagine. But the relationship doesn't get old. That never goes out of fashion.
It never does. Insurance has always been a relationship business, and I have one of those badges. If I had one, I was here 10 years ago, and so this is my 10th ITC. 99.5% of the vendors that are in the expo hall did not exist 10 years ago, right? And maybe I hope that they all do, but 99% might not exist in 10 years from now, and that's probably okay. So to add to the advice bandwagon, I would want MGAs to be forward thinking and to make that change, to implement something rather than sitting on the sidelines for too long, because that's what I see with a lot of our prospects. They know that they need to change. They know that they're going to receive 10x more submissions next month than what they've received now. But they somehow are hoping and praying that their strategy is going to work, and offshore vendor that they have for clearing submissions or doing the underwriting work is going to be coming to their rescue. It's not going to work that way. The MGA space and the E&S space has grown rapidly, and there's so many statistics that talk about how it went from 15 billion to 150 plus billion, and it's going to continue its surge at double digits in cumulative growth. Now is not the time to sit on the sidelines. Now is the time to take decisive action. So with that, I'm going to open it up for about 7 minutes that we have, because we've been warned about time. So we have about 7 minutes. We would love to take questions from anyone in the audience.